The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the end of this week, of course. By the way, Tommy Terrific couldn't be on today. I forgot today is Mika's birthday. She's 5 years old, and believe it or not, his little daughter takes precedence over us here in TFNN. I'm just heartbroken. Maybe we can catch him before she reaches the age of 6 next year. All right, folks, I posted the FTSE, I posted the DAX. These are long-term. As you can see, there are some topping type patterns. Where they're going to materialize yet, we don't really know. Look at Apple, folks, where it is. It hasn't even budged. It's still all-time highs, even though it's got this nice pattern here. But these patterns, sometimes when they fail badly. So pay close attention to it. Very important. Folks, when I first met John Hill in 1970, it was April of 1970, there was about 100 people at the Stanford Court up in San Francisco. What was the name of it? Not CompuTrack. It was, son of a gun, it was Ray Frechette and Jim Hurst were doing the cycle thing. What was the name of that program? I can't remember it. That's been 50 years ago. Oh, my God. Anyway, they were presenting the material, and there were all kinds of people there. I was there with Peter Elides and Larry Williams. I knew those guys, but there were a bunch of people there that I didn't know. John Hill was there. He knew Peter Elides and, of course, and Larry Williams. And so Larry introduced me to John Hill, and for some reason, John took me under his wing, and boy, that was really good. Now, in 1966, John wrote a book called Commodity Stock and Trend Analysis using advanced technical analysis. And that book was written in 1966. It sits on my desk right here. And I believe there's still some copies available. What I'm going to do is I'm going to contact John's son, Lundy, and see if there are any there. And I'd like to buy them. And then we can offer them to the folks here at TFNN that would like to have them. So I would certainly going to try to find if we can do that. A lot of things have happened over this past week, with these patterns exploding, the Federal Reserve and all the other stuff going on. So the old Chinese curse, may you live in interesting times. It is certainly upon us. So we want to keep in mind here that these markets are volatile, and they're certainly going to be maintain that for a long time. Just a few short days ago, folks, this is a 4-hour chart. We're going to go back here to July the 6th here and talk to us about the crude oil now, because you'll notice here, folks, that we had that 3 drive to a top pattern there on July, the following the holiday, July the 5th, right at the perfect ABC, right up there at 77. Remember, that's when Bloomberg was promoting the 6-year high in crude oil, and it was not in crude oil, but it was in the what they call that stuff with the Brent. The Brent crude oil had made a new high. We did not make a new high in WTI, West Texas Intermediate. Now look, when the market breaks down, okay, then it goes right up to the 78% level at 75.60, and look where we are now, folks. Today we went all the way down to 70.62. We just had a rally there off of the off that new low at 72.14. So that's going to be an important one to watch. But we pay very close attention to this ABCD pattern here in crude oil, folks, because between 77 and 70, the rally back to 75, that gives you a price objective, folks, that you can hang your hat on, just about $69 a barrel. Well, I mean, for it to go from 77 to 69, that's a 10% correction. That's just a normal correction. So pay attention to crude oil coming up this next week here, or even today, because it might have a really good rally. And that's what you want to be paying attention to, because they have some really good things. Ruby is looking at cocoa and sugar And we can do that for you today, young lady, because I have the lines have just totally overwhelmed TFNN today. So we're going to do that for you, darling. So just bear with me here. Hold on one second here. Only take me a minute. Oh, let me get here. I've got to do it a little bit differently. Bear with me. It's going to take a tiny bit longer, Ruby. So just give me a second. I'm, like the old man said, I'm not as good as I once was, but I'm as good once as I ever was. You want to look at Sugar the Sweet. And I see that in here. Where is the Sugar the Sweet? And it's right here. And, wait a minute. Where is Sugar? There it is. There it is. Okay, now Sugar's got a chance here, Ruby, because we're getting close to being back above that 18 level. You'll see here. There we go. This is good. You'll be able to see we didn't take that low out. This is good. This is good. Hold on one second here. Okay, let's take a look. All right, there's Sugar. You notice we did not take the week's low out. All we did last week was make a 78% retracement down there at 1676. We've now rallied $1 a pound. So that's going to be an important resistance area because that's 618 of that whole move. So like I mentioned before, for Sugar to be bullish, Sugar has to get above that long-term $18 level. And the reason for that is, and let's just get this up here to take a look at this because I think I'll be able to show it a little bit better here. Yes, here we go. Let me get this out of the way here, and you'll see it just as simple as possible. And this is a good one to look at if you like ABCD, and I like ABCD. Here is a long-term monthly. You'll notice that the monthly hit 1845, folks. That was a 61% retracement off the high of 2016. We've shown that many times on the weeklies and stuff. So this is why that is so very, very important. But we've had a heck of a rally here, and that's what we're watching as far as that. Now you want to look at cocoa, hot chocolate. I think hot chocolate had a pretty good rally. Yep, and now we're backing off just a little bit here. Let's just see where we are. Hold on a sec, see where that rally went to. I'll mark this in so we can all take a quick look at it. And it went a little above the 61% retracement here, but you'll see here coming down this sharply today tells us that we're going to go down and make that ABCD pattern there down another $1.20 there at around $22 in the cocoa. Watch that because you can see the perfect ABCD pattern right there. We rallied up to the 61% retracement at 24.25, and that also brings you down to that really strong support, and that was a support from going back to October of last year. So 22.12 is going to be the interesting thing to look at. We're a point away right now. We're down 2 points today, so it's well on its way, to starting that journey. Let's see if there was anything that would have tipped us off early this morning. Well, you can see here we've been in a pretty sharp down move all day from 2 days ago, so that's why we're headed down towards that letter before that level. So that's it. Okay, now if we have another question here, 877-927-6648, I will be happy to answer it. And if not, I wanted to get up here and talk a little bit. Hold on, just about the gold, folks. Very, very important. Okay. All right, we'll be right back.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted the chart of the gold market that I wanted you to see because you'll notice here that once we hit above that level, we went up to that key level, which was at 18. What did I do with the chart, Larry? Shut the front door and raise the rent? Not good. Just a minute. Yeah, I've got it right here, so bear with me. I'm going to do it in two sections, folks. Hold on one second. I'm going to do it this way right here first so we can see it. There we go. This will be just a minute. This is what I send out in the videos. I sent this video out. Well, I send a video on gold every night. But remember that 1835, that was a 1.27 expansion. It was also a perfect 50% retracement of the high that we made on at 1910. So that's where we are. Now, if you look at this on a smaller time scale, and that's what we're going to try to do here, is we're going to look at this on a half hour. Let's try it on a 15 minutes so we can see it really clearly. You'll be able to see what we were talking about last night was they were forming a head and shoulders pattern here in the gold right up there at 1832. That was a 78% level off the 1835. And you know what's happened now. We've had this big move down, and look where it stopped, folks. Stopped right at the 61% retracement of the low we made back on Fed Day at 17.99. It stopped spot on the money there at 18.12. We're now trading at 18.16. These numbers don't work all the time, but when they do, you have to pay close attention to them. So I think that's the most important thing to remind ourselves. Now, folks, the yesterday in the Dow Jones Industrial Average, we went down on the opening. We were down 200 points before the opening. The Dow Jones, I posted a chart yesterday. I don't want to post it again today, but yesterday, if you would look at that chart, you'll see that the exact low from the main correction back 5 weeks ago was an exact 382 retracement when the Dow was down 250 points pre-market. Of course, it rallied back, and the Dow is holding up relatively well today. If you'll remember, we were talking about the standard deviations in the Russell. And if you take a look at what happens to the Russell, The low that we made down there has relatively held. That was down there at 61.72 was the number. I think we made a 21.65 print quickly, and now we've been going counter trend today because the rally has been leading the market up. So those are a couple of the ones that we're paying very, very close attention here to today. So I think it's important that we remind ourselves that that's what we're looking at, because this market at any time could really explode to the upside or melt down. Which way? It's anybody's guess, and that's the way it is. Now, Mr. Twentyman has sent us something that I wanted to talk to you folks about, and that is something that was in the news, and everybody loved it. In fact, they were talking about trading gold bars for this, folks, believe it or not, just a few short weeks ago, and there was the lumber. Now, lumber is basically a commercials market. It's not for the faint of heart. Even if you don't have a heart, it's not for a faint of heart. But I want to show you the characteristics of this chart, because you might see it in other things someday. You'll notice the breakaway move to the up day with the limit up, limit up, limit up, and then you see the top red arrow. The top red arrow is where it gaps down. Okay, now that surprised a lot of people. Actually, you should have been surprised, because it was an outside day where you had much higher high, closing right on the low, taking out the lows of the previous day. You got to be short that market, because if you have the gap down like that, that's it. That's a yum that Mr. Hill had in his book, and he has some great things on here. In fact, all the patterns that are in my painting behind me here on the oil painting, they were on a little 3x5 cards, and Jack's wife Elsie painted the thing for me with all the different patterns. This is long before Gartleys and butterflies, and this was 50-some years ago when I had that painting done, and then I had one done for John. He liked it so much, I had one done for him. But it is oil on canvas, and it's quite lovely. But the second arrow is the important one, folks. Look at this. The market breaks down from 1,600 all the way down to $1,000. All right, and boom, it rallies back. Guess what? Judge's ruling. 61.8%, and then say goodnight, Charlie, and away it goes. So those are the ones you want to pay very, very close attention to, because they give you some really good moves when they do occur. So let's remind ourselves that that's what we're watching here as we take a look at some of these things here this morning. Okay, Basil saying there's an eyelid reversal today in lumber. Let's just see. I've got the updated one. Let's take a look here. Well, if it's going to be an island, let's see. Here's the one that Twentyman just sent me today. I don't do lumber. I mean, I'd like to see it just for technical purposes, just to understand that it works good. But, that thing doesn't. But, folks, we went from basically 1,700 all the way down. Today, spot is trading under 600, 556 for lumber. I mean, that tells you that thing was orchestrated. So you just got to be careful, boys and girls. When you see vertical things like that, they're going to end badly. We've got one of those vertical things going on in the tech sector, but that is not that has not turned down yet. That doesn't mean it's not going to. It just hasn't done it yet. And, it's had 3 drive to a top and all these things, and that's pretty much it. Yeah, it's had a heck of a pullback, about 70%. So remind ourselves that these things don't happen too often, but when they do, you got to pay close attention to them, okay? All right, let's move on. Another question that someone talked about was the crude oil. I wanted to bring that up to you today because crude oil made an important bottom down here. We'll get up here. I'll show you where we were. You'll notice here that 75.60 was a 61% retracement that we thought the market was going to break from. I think we featured that in the newsletter. Let's just double check just for kicks and giggles to see if in fact that's what we did do. Shut the front door and raise the rent. Yep, there it is. There's what we were looking at right around that 75 level. And of course, from 75, we've broken down and we've taken out that low now at 70.80, which means the ABCD structure on this takes us down to 69.01, which I think we will hit sometime soon. Whether it's in my lifetime or not, I'm not sure, but it'll be pretty close, I would think. The other one that I thought we did relatively good on was the Treasury bonds. We had that really nice move. We covered it into the Fed meeting, and we rallied up another 3.5 points, going exactly to the 78% level up there at 163.30, and we reversed from there, and now it's been backing and filling. I think we're down about 10 pips for the high. So those are the few that I'm looking at. The grain markets have been very strong, related to the weather markets that's going on, and there's just the fact is I focus so much on the stock and other stuff here that I'm watching these because I still think we're going to get a chance to buy the corn at a pretty good price, and that has not happened yet. The Christmas corn should be leading the market up, and it's not. The beans are led by oil, of course. And so those are some of the things that I'm watching today as we get ready. This weekend, we've got to focus, folks, on the foreign exchange because we are near some major talking points here in this. I will talk about the dollar index when we get back because I think it's going to be an interesting one to watch.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we're back, and I'm going through this book here, Stock and Commodity Market Trend Trading by Advanced Technical Analysis by John Hill. And I am going to get these books. I don't know how many they have, but I'm sure they have some because John hasn't been doing anything for the last 3 years, and now he's totally retired. So it's going to be a really nice thing to have on your desk. And I think we'll be able to do it. Just the question is to get Mr. Lundy Hill to reply to all this. Now, let's take a look here. At the U.S. dollar index, folks. From the April high, we went down, makes a double bottom into May. Then we rallied up to the 78% level where we've been for 2 weeks. Now, I highlighted this red box for one particular reason. The fact is that we've been at this 78% level for 6 days. Now, yesterday, the market was down a little bit, up on the day, but down from the high, so that pattern hasn't completed. We think it's going to be at around 9,300. And we have, I think, do we have a caller in? Are you kidding me? Jeff from Philadelphia is on the line. I don't know how you got in, young man, but God bless you. What can I help you with?
Well, I heard Tom Hugart wasn't able to make it, so I thought it would be easier to get through the switchboard there.
You're a welcome addition, my friend. So what can I help you with?
I wanted to see if you'd like me to share how I've been using options to profit from the standard deviation level.
I would love that, because that's where they come from, and that's why options is such a good business to go to, and it's good for prediction. So Jeff from Philly, you've got the mic, and tell the folks what they're doing. I know they like to hear it because you're learning, and so are we. So please continue.
Okay, sure. So what I do is every Sunday when I get your newsletter, I see the standard deviations for the futures. But what I do is I use the formula that was in your newsletter many weeks ago to calculate the standard deviation for the ETFs for the index for the equity indexes. So I use ETFs SPY, the QQQ, and the IWM for the Russell. So I calculate the standard deviations for those, and then I put in a standing order that if those ETFs hit the 2 standard deviations above or 2 standard deviations below, I'll just use one. Let's say the 2 standard deviations below. So let's say it's just 100 for discussion purposes. So I put in an order that says if, like IWM, goes down, the price goes down and hits 100, which is 2 standard deviations down, I sell a put spread from 100 to 97. So those are 3 points, below the second standard deviation, with the assumption that the market makers are going to get that price back up over 2 standard deviations. And I usually get between $50 and $100 premium I collect when I sell that 3-point put spread. So I'm really only risking $200 because the 3-point spread is a $300 risk, but I'm taking $100 in, so I'm only risking $200 per spread. And then so I sell that, and then I just sit there, and I've done this a number of times now, and it's worked every single time. And then the next day, well, not that usually it happens like on a Wednesday or Thursday, and then I just hold on to it, and on Friday it'll be up above that 2 standard deviation line, and it'll expire worthless. Now, I don't actually let it expire worthless. I put a 2-cent buy order in, to buy it back, because anyway, it's worked every time I've done it.
Yeah.
So I just wanted to share that with people. Well,
that's very important. The thing you have to remember, Jeff, is when you're doing options like this, whenever an option doubles against you, that's the red light signal to get out, because these things, if you're writing an uncovered call or an uncovered put, you could really hurt yourself. But if you're spread, that's okay. But remember that these things, when you're an option writer like what you're doing, that's it. If you ever go down to the Chicago Board Options Exchange where Norm Winsky was, they have these big badges that they wear in their jackets, and it says "Sell an option, buy a Mercedes." because people that sell options, they make their money 85% of the time, where people that buy options lose money 85% of the time, because the intrinsic value is a decay mechanism, and it's also structured against the person, whereas if you're writing it, it's structured in your favor. The fact that you're using it in conjunction with the standard deviation is very important. You can see what happened with the Russell this week. I'll post that again. But we went right down to the second standard deviation and turned right around. So I think it's important to remember that these things do work, but they don't work all the time. And anything that goes past 2 standard deviations, that's where the problems lie, and that's what caused the crash. Well, the crash was started already, but it accentuated in Chicago when the market opened at 9:30 on October the 19th, because we were down 2 standard deviations in the Dow Jones already, and they had no other choice but to come in and protect, and that's when they had to press the market to the downside. So,
well,
anyway,
I actually did this with the Russell this week. I forgot I left something out. I used the weekly options that are expiring the same week, because the standard deviations are only good for a week, right? And then you're so close to expiration, because it's only like a day or two till it expires, that the time decay is huge. So it's a big help to have that on your side.
That is. That's good. That's great. That's what you want to be doing. You want to keep those odds in your favor, and you're going to do just fine for sure. Well, listen, thanks for calling in, Jeff. We really appreciate it. Keep those cards and letters coming in, and I'll tell Mr. Hugard you set in for him and did an admirable job.
Oh, thank you very much. Have a great weekend. Bye-bye.
Okay, keep studying too, my friend. Okay, folks, we had a little bit of a nice 10-point rally here in the S&P a little bit. The Dow Jones rallying a little bit, so that's good for all the bulls, bad for the bears, but that's neither here nor there. All right, now I wanted to bring to your attention something else that's happened this week, and that is the fact that when we've had these gigantic moves like we've had in the NASDAQ, and I've already showed you the Apple. I'll bring the NASDAQ up here also, if I can find the darn thing. Here it is. I have it right on my desk all the time. We are in the 11th week of a 10-week up, so we've gone farther than that. We have not taken out 15,000. We got to 14,990 twice, if you remember that. We made that double top, so that may or may not do anything. The key stock of the week would be Apple, because at that 150 level, that's where Apple runs into a great deal of problems. I've sent the video out on that. I've talked about it here on the show. I don't want to, beat a dead horse, as they say. So that's pretty much it. I don't want to go in all the things that are there that could make the market be a little bit cautious. But the one thing we got to remember, in fact, is the Fed has everybody's back. They've already said that, we're going to taper this thing off when we're darn good and ready, and they're not going to let the party end right now. The problem is sometimes the Federal Reserve, what they tell you and what they do are sharply different things. If you've ever read the book My Own Story by Bernard Baruch, he talks about after the Fed was formed at Jekyll Island in North Carolina in 1913, what they did in the crash of 1929, they started raising interest rates dramatically as the market went up. This caught all the shoeshine boys and everybody else that were trading with margin calls, and then they turned it down, and they didn't do anything, folks. All the way down to 1932, the Fed did nothing. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we've got a request from the master himself, Mr. Z, John Chaney, and we're looking at Amazon on a daily chart. You can see I posted it twice in there where you can see the 3 drive to a top pattern, beautiful ABCD topping up there at 37.70. The high was 37.69. Oh, looks like, yeah. 37.80 was a high. Now we've been all 5 days. We're down to 35.86. But if you look closely, there's another ABCD pattern, and this also, I believe, is a perfect one. Let me double check to see if I can bring this up so you folks can take a look at it. I'm infatuated with ABCDs, folks, because I've been doing these for so long that it becomes second nature. They're like distant relatives. Well, not even so distant. Oh, look at this. Shut the front door, as Mark Douglas would say. Here's the last one that you have. AB equals CD. It's all you need, my boys. AD equals CD, as Mark would say. There you can see we have multiple ABCDs up in here. We've had a pretty good break. We're almost into that gap area, so that's going to be interesting. We have a lot of these FANG stocks are doing the same thing. Microsoft, we've seen all these things. That's why it's so interesting now that where we are in the market, because the fact that the excuse me one second, is the fact that the market has been able to, continue higher with Apple still making new highs. I'm not sure Microsoft has of yet. Goldman Sachs has had a pretty good reversal, folks. It started to roll over. One of the reasons why the Dow started off badly today was because of Goldman Sachs. In fact, all the banking stocks, did not look very good. That doesn't mean they're not going to be good tomorrow. It just means for those few days, that's what you were paying attention to. So I hope that gives you a little bit of idea of what's going on here with the market, and that's the main thing to pay very, very close attention to, because that's the thing that makes these things go up and down the way they go, up and down, up and down, up and down. All right, well, last on the S&P is we're trading at 43.42. The bonds are 43.18. And the crude oil is back up to $72 a barrel after selling off a little bit just a few minutes ago and then coming back. We've had a pretty good rally in the crude oil, and we've come off a major, major bottom in crude, folks, because of the expansion number that was down there. I'll bring this to your attention here, because what you didn't see here last night is what we were looking for in the crude oil. You can see the 382 rally yesterday that we talked about up there at 73. Well, once we broke below that, folks, we went all the way down. I mean, we collapsed all the way down to 70 and change, another $1.25 lower, and now we've rallied back above that level here of 71.60. So that tells us that we have a major bottom here in crude oil today, and that's why you want to watch the expansion of seeing what's going to happen at that point. So just technical analysis, boys and girls, nothing more simple, nothing more easier to look at, and that's about it. One other question someone asked me about my days at Drexel, why I got so lucky. Folks, I've always been lucky in everything I've ever done. I mean, really have. I mean, been on the right side of the street, even when there's an accident on the wrong side of the street. So I've been pretty fortunate, but that happened to be I just fell into a flat out gold mine. And boy, I tell you, I've done a lot of things in 61 years, and I'll tell you, nothing was more enjoyable than the time from 1976 to 1982 at Drexel Burnham there in Beverly Hills. And I'll tell you, Twentyman came with me after about 3 years. I think he came in 79 for the last 3 years. And then after that, I went to the Chicago Mercantile Exchange because I knew these computers were going to be coming, and you'd be able to, your desktop, you'd be able to see the prices, and you could, draw your lines, and you could, oscillators and moving averages if you want to, lots of color, pizzazz. I was seeing the repros of these things with CompuTrack, and that it was really fun. But down there in New Orleans, Walt Bressert, Jake Bernstein were all involved with that, and so it was really interesting to see the development of that. Before that, the only way you could get prices other than a ticker tape was if you had an ADP, automatic data processing machine that ran about $15,000, you could actually get a 5-minute chart on some of the things coming directly. What they did, they converted it from the ticker tape into the computer so that they could print a chart out for you. There, of course, we didn't have monitors and stuff like that, but you could see a printed chart on a 5-minute chart or a 15-minute chart if you wanted to pay that fee of about $5,000 a month. Some people did. I did all my stuff by hand because I kept it as simple as possible, which I've tried to do, and so far it's held up relatively well. Let's double check here to see how the markets are jumping around here. We got the S&P back down at 340 again. Folks, these markets are you notice have a little tiny bit of a bearish bias these last few days. Part of that is because of the fact that there might have been a major top formed this past week with the 3 drive to a top pattern that we've shown everywhere. I don't know if it is a top. I don't know if it is the top. It may be a top. I don't know. All I know is I've gotten more flack about this than I did in the bottom of March of 2009 when I was calling for the mother of all rallies, and it certainly did do that, much bigger than I ever thought. So that's it. I wanted to share a really great chart here from one of our friends over in Jakarta. He's a student that does does a lot of trading, and he does a lot with crude oil. He does a lot with gold. And what he's done here, folks, this was what he was watching here in the crude oil, and he's using the principle of the AI to help him, discover, what you're looking at. Now, both of these trades happened to work, and then of course they went down lower. But the ones that he was watching, since you're watching a shorter term chart, he's trying to line up his buy point with as close to the time as you possibly can. So that's it. Bo, I was going to show you the chart on the hogs, and I cannot find that darn thing, but it showed you the reason why those hogs were going to rally is both days. Thursday and again today, the low was right at a 382 retracement of the last swing. If hogs would have been really negative, they should have melted down through that, and they did 2 days in a row with strong support at the 382. You've got to respect that because that's the last line of defense, and if they don't get on after that, that's it. Well, that's why you bought it. Well, may you live in peace, my friend, and trade with the trend, as they say in the trade. Okay, let's get here with the euro for 1 second. Oh, excuse me, 1 second. I want to get the euro. I lost the euro. Shut the front door and raise the rent. I don't have it. Doggone it. Oh. Wow, I lost the euro trade. Doggone it. Well, I'm going to cover the euro over the weekend. I'm going to send a couple videos out on the foreign exchange, of course, especially with that dollar index, reciprocal of that being the euro. We have to watch that very closely. But I'll probably do 6 videos over the weekend going over the precious metals, the stocks, the bonds, and all the foreign currency. And then also we've got to work on the grains because we're not too far away here. We're in the middle of July here, so the growing season's going nuts. And so it's going to be really interesting these next few weeks. We've had a big move in this. If you remember, we talked about this the 3 drive pattern that we had down in Christmas corn the other day, and that was down at 505. We're trading up in the 560s now. You see the 382 retracement, just like in Apple. Once you went above that 546, that's green light go, because once you break above 382, it's a green light go. So let's take a little break. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks, and we're taking a look at the euro on a weekly basis. I'm going to go over this quite thoroughly here. This is going to be very, very important, folks, because you see the first low that we made there at the 382 at 117, we rallied up to the 786. At 122, we're now down to 118, and we've been down 1, 2, 3, 4, 5 weeks in a row. Actually, 1, 2, 3, 4, 5, 7 weeks in a row. So the assumption is that when we come down here, we maybe take that low out at the 117 out by just a little bit. And if that can hold, then you've got a really, really good spot. This is the reverse of what we're looking at in that U.S. dollar index. because the 53% of the index is based on the euro, so that's why we're paying close attention to it. But we have made lower lows this week, and we've done it for the last 7 weeks, so it's tremendously oversold. That doesn't mean it can't go a lot lower, because if you look at this from an ABCD structure, which we usually do, you can easily make a case for 115, and that would make a case for 94 on the U.S. dollar index. So that's why it's important to follow how much it's going to cost to enter the trade. Not the question of how much can you make on this trade, but what's it going to cost me to find out if I'm right. And that's where I spend 90% of my time. The other 10% of the time, it's what is it? The other 10% of the time that I do? Oh, that's when I work around the house for the little princess. Anyway, let's keep a really close eye on these currencies. You'll get videos, updates over the weekend. I'm going to be doing all of them, the Aussie, Canadian, Japanese yen, British pound. So you'll be able to see how they all fit together and get us a good picture of where the dollar's going to go. I don't see a collapse in the dollar like you see in the news with Jim Rickards and all that other stuff. That doesn't look like it's in the cards to me, but that's my 2 cents worth. And like I've always mentioned, if you pay more than 2 cents, you've overpaid. So folks, as we come to the old last horse coming into the corral, it's have a wonderful weekend. Live every day in an attitude of gratitude, and may God bless. And please do something for your neighbors.